All right. Hello and welcome to this webinar today, and it's titled "How to Trade Using Pivot Points." And my name is Nour Al-Hammoury, and I work with Sky News in coordination with also Orbex.com. And we have around like 45 minutes to talk about this trading strategy, and it's actually not an indicator. We're not talking about indicators right now. We're talking about some sort of a mathematics here, which I believe at some point that it's a little bit more accurate than technical indicators, because at the end of the day, technical indicators are built on the price action and not on something genuine. So first of all, again, I would like to ask you again: is the sound is loud and clear, and can you see my screen? And if you have any questions before we start. Okay, yes, both. Yes, sounds okay. Okay, I'm seeing so many yeses. That's good. Okay, fine. So let me just give you a very brief information about my background. I used to work for many other companies than Orbex, and right now I'm actually a business analyst for Sky News, and I'm working at the same time with Orbex. But what I use like two different approaches at the same time, which is what we call it intermarket analysis, which is merging between the technicals and fundamentals, and we'll talk about it a little bit later. But today's webinar is all about what I use on a daily basis for, we can say, scalping if you want. We can also use it as like just an intraday a trading method in order just to know where exactly the action might start, or where exactly the levels that we should see some action there. So regarding the questions, before I start, I'll answer all your questions at the end of the session. And of course, during the session, I'll be asking also some questions. If you didn't understand something, I'll also repeat it again. Okay, so regarding the approach that we're talking about it today is basically will be built on mathematical method, but at the same time there is actually an automated indicators which is available across the internet. Everybody should know it, which is the pivot points. But the thing that I would like uh, to clarify here, that it's not about just like levels that you need to know and you act based on it. It's totally different. It's you have to merge it between uh, the indicators, or the uh, uh, the pivot points or the levels, with the major outlook of the day, or with the major outlook of the week, or even of the month, so as you can know exactly where we should be able to see some action, some action or some price action, whether if it's a support, if it's a resistance. But at the same time, one of the things that I always stress in trading: wait until the trade come to you, and don't rush into trading on a daily basis. This is what basically, for the past, I've been trading for the past 11 years. This is my 12 years, and one of the main things that I learned actually, that don't rush into trading, and keeping your to stay in the game is one of the main things that for your success, as whether you want to do it as a full-time or even as a part-time. One of the main or the keys for success in trading the FX market or the currency market is to stay in the game as much as possible, which means rule number one is to cut your losses quickly. If you're in a loss, you have to try and cut it quickly. Don't marry your trade. That's number two. And number three, don't don't drive against the trend. But the final one, which is I really believe in, is no matter what happened, try not to buy or to go into a long position while the price is basically posting new highs. At the same time, don't go into any kind of shorts or short positions or selling any of the currencies when the price is basically posting new lows. This is the one of the most important rules that I use on a daily basis, and waiting for the trade to come to me is much better than to rush into the market, and at the end it might be very very negative. So Let's get back to our subject for today: how to trade using the pivot points. So at the beginning, or starting with, let's just clarify what exactly we are talking about here. So how to use or how to trade using the pivot points. First of all, the first thing that you're going to learn here is how to calculate. I know it's kind of like sometimes it might be boring, but it's very important to know how to calculate it because it's for you, it's for your knowledge to know how basically we calculate it, or all the indicators that you see online, how do they calculate it. And there's many of the pivot points also indicators, but at the same time the calculation is almost the same. There are also many parts of the pivot points, or many methods of the pivot point, just like the Fibonacci pivot point, which is also that we use, or that I use in my trading as an accurate actually levels for the day ahead. But so let's go into the definition. The pivot point and associated support and resistance levels are calculated by using the last trading sessions. So at the end of the day, I would look at the open, the high, the low, and the close. This is the main things that you need to know, that the pivot point is calculated through by, I'll show you the calculation in a bit, but by looking at the open, the high, the low, and the close of the daily candle. Okay, and since it's 24 hours and we're around the world, some of you are in the Middle East, some of you are in Europe, some in the States, even also in Asia. But what matters here is that since it's 24-hour market, most forex traders uses the New York time, or the New York closing time, which is 4 p.m. The Eastern time, as the previous daily close, which is very important because also it matters when you calculate it, whether if it's for the daily close or for the 4 hours close. Also, you can make it on the short term, but on the day on the longer term is much better than to keep it on the short term. Okay, the next page will definitely look at how to calculate the pivot point. So the first thing, as I said, we look at many different things, but first of all we have to look at the pivot point is basically the high plus the low plus the close divided by 3. This is the simple way how to calculate the pivot point. The high plus the low plus the close. The price, of course, let's say the euro today, let's say we're talking about 1.07, 107.30. The high is almost 107.78, and the close, let's say it's here 107.50 is divided by 3. Is this clear so far? Okay, I'm seeing a lot of yeses. Okay, fine. That's good. Okay. So that's the main thing. After you get the number, whichever the number is, this is called the pivot point of the day, of the previous day, not for which is, of course, you're going to use it for the next day, but this is what you call it, the pivot point for the day. Okay, so from now, after you get the pivot point, you will definitely start calculating the support resistance levels are also then calculated off the pivot point like so. So the first level, or the first level support and resistance, which is we call it R1, or whichever you want to call it, resistance 1, R1, it's all up to you. But it's very well known as an R1, as the first resistance level and the first support level. Okay, which is basically you multiply the 2 by the pivot points, and then you deduct the low, the previous daily low from that price. Okay, so 2, so the price is 1, let's say, and the low is whatever, 0.5. 2 by 1 minus 0.5, you get 1.5. So that's the first resistance area that we will be looking for in action around that area. And later on, I'm going to show you a very good charts about it, and so as you can understand it correctly. But for the time being, let's just get into the boring thing that we're doing right now, which is just, I hate actually reading from the slides, but That's the way that you can understand what exactly we're talking about. So the first support area, which is the same, but this time we're going to deduct from the high. So you double the price, the pivot point, and then you deduct it from the high. This is the first support area. Okay. At the beginning, we said the first resistance area is you double the pivot point and you deduct the low. But the first support area is basically you double the pivot point and you deduct the high. So this is clear. Okay. The second support and the second resistance area is also calculated as shown here, which is the pivot point plus the high minus the low, plus the high minus the low. I hope this is also clear. The second support area is the opposite. The pivot point minus the high minus the low. You don't try not to confuse yourself with these calculations, but you have to understand it pretty well. So starting again from the pivot point, as I said, it's very easy. It's the high, the low, plus the close divided by 3. But the first resistance area is you double the pivot point and then you deduct the low of the previous day. And then the support area, the first support area, is basically you double the pivot point and you deduct the high. That's the first level that you keep on your chart. The second resistance is the pivot point plus the high minus the low, and then you'll get the first resistance. And the second support, the second resistance, and then the second support is basically the pivot point minus the high minus the low. Okay. I hope this is clear. If this is not clear, please, if you have any questions, let me know. Is that okay? Is that okay? Okay, that's good. Fine. Hold on. There's one thing missing, which is I'll just put it by the way. Hold on. Last one is sorry. Okay. Where did we go? Sorry, I have to apologize. Okay, so the second support is also ready. So now the third support level, support and resistance, is also calculated as shown. The third resistance area equals the high plus 2, and then you add to pivot point minus the low. I don't know if you can take a snapshot of this calculations, but at the end you will find the presentation on Orbex website with the recording as well. Okay, so the the third support is the low minus 2 by the high minus the pivot point. Okay, I hope this is clear for everybody. Is that clear? If you have any questions, please let me know before we go further. Clear, clear. Okay, fine. I need more yeses, please. Okay, fine. Now let's look at the fun part, which is the charts. So this is how it should look. This is how it should look like at the beginning of the day, of your trading day, or at the end of the previous day. Okay? Once you calculate the pivot, you put it on the chart as this, which is, let's say in this example, we have the pivot point as 124.20. Excuse me, I apologize. 124.20. The current price is 125.21, and this is very important actually here. One of the main things that I always look at is the pivot point. When I calculate the pivot, and then I would look at the current price. Is the pivot or is the price above the pivot or below it? Which is very important, because sometimes, and most of the time, when the price closes above the pivot, this is actually one of the positive signs, at least on the short term, for the next day. So whether if we have an uptrend and the pivot basically, or the price closed above the pivot here, just like this one here, this is kind of a positive sign. And since we are trending for the past few days or for the past few hours, this is also very, good, a very good, at least sign that more upside is possible, and the euro or whatever the currency is still positive, and it's still also has more chances to go up. Okay. Also, there are 6 midlines level between each 2 pivot lines. Yeah, that's different. We're gonna talk about it later. That's not the second. This is the beginner session of the pivot, and then we can add the Fibonacci pivots and whatsoever. Okay. So that's again one of the things that I need to look at always is that which, if the price or if the euro basically will close today above the pivot or below it. If we're trending higher and the euro closed above the pivot, that's very good. So I'll be interested to buy on dips. I would be interested to buy on support levels. At the same time, if the euro is trending higher, but at the same time, at the end of the session, it closed the day below the pivot, I would stand aside and just wait until I see more price action. But that might be one of the signs that the uptrend is over, and it might be a sign for a reversal ahead. Okay. So the pivot, we have the first support here, 123.03. The second support is 102.73 and 119.54. Okay. At the same time, the resistance area 126.48, and then we have 127.67, and then the third one 129.95. And actually, my favorite levels are always the third resistance and the third support, because this is what I usually try to wait for. That's why I'm telling you, like, I would love to wait for the trade to come to me rather than to rush into the market before news, after news, whatever. At the end of the day, these levels might be broken pretty easily, unless if there was any kind of like, unless if there was no economic figures or nothing in the economic calendar. But I'll explain the R3 and the S3 later, because today was a perfect example for such thing. Okay. Uh, so is this clear for the time being? The chart is pretty clear. Okay, that's fine. Okay, that's good. Yeah, okay, fine. The next one. First of all, we're going to talk about the range trend, how to use the same method into or to trade the ranges. So as I said before, since the price closed the day above the pivot point, which is this one here, and then it continued to slide all the way back down, which is, this is the British pound, and continued to slide all the way down, I will be looking to buy on support area, on the first support area, or even if you have any other levels in between, just like the gentleman just said, if you have the Fibonacci pivot points or any other indicator that you look at, you can also try it. But for the past, as I said, for the past 11 and 12 years that I've been trading, one of the most important levels that I use is the pivot points and the Fibonacci pivot points, which is very important. And I believe that's even more accurate than any other technical indicators, because again, as I said, technical indicators are driven by the price action, but the pivot point is not actually, it doesn't change. It doesn't change during the day, but it changes the day after. So that's a very important thing to keep an eye on. Okay, so I'll be looking for a buy, or I'll be looking to buy on dips, whether on support one or even on the second support. So we have here at, let's say, the 15 minutes, we have the 143.90. I wish cable was at that level now, but never mind. 143.90. That's the initial support, and you have the 143.10. That's for a little bit longer term trade. But for the short term, 143.90, I would be interested to start buying around that level. And at the same time, the stop would be right below the S2. That's on the very short term. I'm talking about here very short term period, okay, which is during the day. Okay. The floor, there's a question here, is which one you prefer, the floor pivot or Carmel pivot? Actually, well, it's two different approaches, but I would, again, as I said, Fibonacci and the normal floor pivot is much better than any other. Carmela, they're good, but at the same time, it's kind of confusing sometimes. Okay, so where were we? Okay, so the first buy order I would love to start with is at 143.92, which is the first support area for the British pound. Okay, and this is with, at the same time, I'll be looking for a stop loss right below the second support, which is 139.10, which we're talking about like 80 pips. But at the same time, the reward is still very good. It's more than 1 to 2 in terms of risk reward ratio. The first level I'll be interested to look for is the pivot point itself, which is 145.37. 145.37. Okay, that will be my first target. At the same time, the first target area, it's between the pivot point and the pivot point and also the R1. Some of you would say, well, what if it goes to the pivot point and then it goes all the way down? Or what if it went from all the way to support area all the way up and then it crashed all the way down? I would say here, one of the main things that I always use, whenever you have plus 20 pips in profit, try to put your stop or try to move your stop to your break even. This, I mean, with this kind of method, it will be, can you hear me? There is someone cannot hear us. Is the sound loud and clear again for everybody? Just to making sure that everything, okay. There's a lot of yeses. Muhammad, you have to, yeah, it's clear now. Okay, fine. Okay. Um, where were we? Okay, so again, some of you would say, maybe if I initiated a buy at S1 and then it started to rise from here, and then at the same time it crashed all the way back down, what shall I do? Well, here's the thing again. One of the methods that I use is that basically one of the strategies, or whatever you want to call it, is once I have like something around like 20 to 25 pips, I would be interested in moving my stops higher, whether to my break even, which is if I did, it would be a risk-free trade. What does it mean? It means that whatever happens to the market, if it goes up, if it goes down, at least I'm not going to lose any dollar, because if the price went all the way down to my break-even level or to my entry level, it will stop me out. Hold on 1 second. Sorry. I apologize, I had to sneeze. Okay, so what happens here is, like, if the price went back down while my stop is at break even, it's a risk-free trade. The worst case scenario is that I would end up not making money, but not even losing any dollar, because if my entry level was 143 and my stop is 143, let's say, okay, 143.92, and the stop is 143, and then let's just assume that the price went all the way up to 144.50. That's above, but never mind. And then I move my stop from 143 to 143.92. The worst case scenario for me is that I will not even lose any dollar, but my best case scenario is to close it around here, or even if it goes all the way up, I would even increase the stop loss into profit. So whatever happens at night, if I'm sleeping, if there is any kind of news, the worst case scenario for me is that the trade will be closed at least in profit, whether if it's $10 or it's going to be closed on a zero. Okay, is this clear for the time being before we go into the next one? Okay, yes, it's fine. Good. So the target area that I'm talking about here is the pivot point and the R1. One of the things also that I always use, if I'm holding whatever, if I'm holding one lot, okay, if my first target is basically achieved, I would try to unload half of my position. So if I'm holding one lot, which is like 10,000, I would close half of my shares, or um, half of my lots. So I would close 5,000, book them, put them in my pocket, and leave the rest to the second one. The second one is the R1, which is 142.20, where I will be expecting a price action around that level. Means that I would like to see some sort of a reversal to the downside to make sure that I'm on the right direction. So, but at the same time, I would love to close within the target area that I just mentioned here. Okay, is that also clear? Okay, fine. So many guesses. Okay, so let's see what happens here. With this trade. So the S1 held. The first thing that we look at is basically you had a very good reversal candle on the 15 minutes chart. Despite the fact it's 15 minutes, but it's very good. But it was one touch. The most important thing in the candlesticks here, it was only one touch. One touch 43.92, and then we opened in green all the way up, and then it continues all the way up. The most important thing that I would like also to say here again, that imagine if it was a real trade and you basically took 143.92 and then you moved, we said our stop was 43.00, not 43.10, because 43.10 is a support. But imagine if your stop was here, and then once it started to go all the way back up, you just move your stop all the way to 43.92 or even 43 or 44, which is like a stop on profit. And it continued to go all the way up to the pivot point. Okay, if you targeted the pivot point, your TP would have gotten hit. That's for sure. But the most important again here, that if you closed half of your shares here, half of your position, first of all, you're still in profit. You booked half of your profits, but it's already in your pocket. And even if the price went back down, if you calculate how much the decline would be, it will be even half of your initial profit from here, from 143.92 to 145.37. So if it was 143.92, 44, so that's 100 and something. And if you unload half of your position, so here your loss in here, let's say it's not a loss, but the pips that you missed is around like 25 pips because you're holding half a position, you're not holding a full position. Okay? Is this clear for the time being? Clear? Clear. Perfect. Okay. So that's one of the important things to do. And at the same time, the other way, which is I don't have charts right now for it, but I'll show it to you later. On the flip side, which is I'll be interested to short. Let's go back into that chart before. Yeah. I'll be looking to short around the R1. This is if the pivot or the closing price was above that. I will be below that. Sorry, I'll be looking to short around the R1. My stop loss is above the R2, and then my take profit should be toward the pivot and toward the S1 at the same time. The stop, as I said, I usually try to move the stop to break even as soon as I can. Okay, so that's in terms of the range trend or the very short-term trading. Let's have a look now to something also interesting, which is the breakouts. Okay, the breakouts. Oh, before that, yeah, well, we already saw that. Yeah, that's the trade. Let's look at something more important and more also interesting. How to use pivot points to trade the breakouts. And right now, just after we finish the slides here, we'll go back into the real market and we'll see how we can deal with that. Okay, but the end of the day, I did calculate the pivot points. So I found the pivot point was 120.97. Okay, we have the R1, R2, R3. But here it's kind of risky, but it's called breakout. It is kind of risky, but it's a breakout. Okay, so at the beginning of the day when I come in here and I'll look at the chart, and then it looks like there was a price action at the beginning of the session. We went all the way to 121.50 and then a little bit back down, and then here it started to spike. The moment it started to spike within the same level or above the same level, I would be interested here too. I would be interested to, and this was only 15 minutes, I would be interested to buy on the breakout. Okay, this is again an aggressive approach, but it's still very good. But rule number one, cut your losses quickly if it goes against you. Okay, if you want to put your stop below the pivot point, this is also possible. This is also possible. Okay, a breakout, it continues all the way up within like less than an hour. So we have 15, yeah, an hour, 15 minutes, or actually it's an hour. It continued all the way to 122.05. So from 21.50 to 22.05, that's a 55 pips, which is more than enough. Here you have also another two options. Whether you move your stop from the pivot point to your break even, and by then it continues all the way up, or you can close. You can close half of your positions, closing half of your positions, and then moving the stop, you're still on the safe side. Okay? And then the second one, we had a kind of a slight breakout, but it failed and then went all the way back down. And then do you see those two candles? It was just almost a doji, which is, you have to know these candles. I mean, come on a little bit. You have to know the candlesticks because candlesticks has a lot of information, but at the same time it gives you very good entries. Okay, so we had two doji candles, and then we started trending higher. The first 15 minutes, and the second one, once, don't forget that this close in the 15 minutes, it was the highest on the day. So above this resistance here and above this resistance here, and now the body is above both levels, which means that's a new high of the day. Here on a breakout, I would buy, but very carefully because we're passing R2. Because again, as I said, this is the aggressive approach. Okay, it continued all the way up and quickly all the way to where it took how many hours? 1, 2, 3, 4, an hour and 15 minutes. From 122 to 122.58. That's another 53 pips. So in one day, if you are able to make like on a daily basis 50 or even 25 pips, that's more than enough for me. That's more than enough. So looking at the example again, it hit the R3 and then went all the way back down, but it continued all the way up. But look here, which is very important to look at here. So I said we had a breakout here and a breakout here. You bought here and you bought here. But here, look what happened. It was a breakout, but it was a fake out. But here, you have to look at this candle, the green one. Can you see it? I would not. One of the questions here is that would you let the trade run multiple days or close at the end of the day? I mean, I would love to take my profit in my pockets. I don't want to keep, unless if I have like if I have a target, which is let's say 50 pips. If the prices or the market kept on going, I can put my stop at 50 and then leave it. But I would prefer to sleep at night with no trades on me and just leave it. I'll come fresh in the morning. I'll look at the charts. Okay, what's happening today, and so on. Okay. So here it was a fake out, but at the same time, the green candle here, it's a candlestick, and at the same time, this is a reversal candle. It wasn't a clear breakout. The close, it was very important. It wasn't really a breakout. It was a fake out. Okay, it continued all the way down again. So if you really did buy here, it would have been a negative. But at the same time, if you put your stops around the R2, you would have still in the safe side. But again, as I said, try to keep it very safe. Okay, the second breakout was pretty good. We had a huge upside on a 15 minutes candle, a break, a close, and then a test, and then taking the safe way would have worked here, which is again closing the 15 minutes above with no reversal, just like this one, and then the test, and then you buy again all the way back up. Taking the safe way would have worked here. Okay, on the downside, it was the same. So from here, after the R3, that's why, again, as I said, the R3 is my favorite, because the R3 usually is a pretty strong resistance area that I will be looking even to short, not to buy, even on a breakout. I'll show it to you later because today was a very important example on that. Okay, is this clear for the time being? For swing trading, I suggest monthly pivot because it's fixed. Yeah, here we have Mr. Abdullah. Okay, for swing trader, I suggest monthly pivot because it fixed the whole the month with high number of pips. Yeah, well, everyone has a different approach, but the daily, the monthly, whatever, the weekly, the quarterly, if you have pivot points, is the same. Okay, how to create a confluence with the pivot points. This is a different thing, Osama. We'll talk about it later. But let's just concentrate because we have a lot of beginners here. Let's concentrate on this one, and then we'll have more discussion about it. Okay? Is this clear for the time being for the breakout? Okay. So now, also, another thing that we have to talk about it here is the stop loss. The stop loss for the breakout is pretty. It's the same chart, and the same currency. But at the same time here, the stop is right below the R1, right below the R2, right below the R3. I'm trying to make it as simple as possible. Of course, trading is not simple. We know that. It's not simple. But at the same time, you need to gain some confidence. And you need to practice as much as possible to try to follow the price actions, to try to look at your charts, like multiple charts a day. It's very important. It also helps you. Okay? That's why sometimes if you watch any of my videos, you always find me with many screens, with a lot of screens. But those screens, I use them to put a lot of charts together and keep on following them on a daily basis. Every day I look at these charts and try to conclude if there is any uh, conclusion that I can get, if there is anything that I saw in the past few weeks and it occurred again. And this is how I got also the R3 to work for me. Okay, so the stop, as I said, so the breakout is here. We went all the way up. We take just a very slight stop all the way below the R1. Here's the target, and then again, even if you didn't close here, your stop is basically your stop survived. Your stop here survived. And even on the second one here, went all the way back up, and then the stop B, even if you haven't closed in here, your stop is still basically alive and still valid. Number three, which is the third one, is basically stop C. That was the breakout. Of course, stop C, this is for this one, by the way. So you buy in here, that fake out, and then your stop has been hit. But if you wanna risk it and go all the way with another buy, your stop should be at the same level. So if you look at the chart, if you took a swing trade, let's say, where I can find the indicator of support resistance lines, that's not a big deal. Don't worry, I'll show it to you. You can find it all over the internet. If you Google it, you'll find it. Okay, but I'll send it to Orbex also, guys. They can send it to you in terms of because one of the people here where I can find the indicator for support resistance lines. Okay. Uh, okay. So the third one, it should be at the same level here. A break above that, and if you look at the chart, if you took this swing as a swing trade for the whole day, it would have been very profitable because if you took only one here and you kept the stop here, and then with the second breakout, you move the stop from A to B and the stop from B to C, you're still made profit at the end of the day. Is this clear for the time being? Okay. So many yeses. Okay. Now, this is the most important thing that I want you guys to have a look at. Okay. Can you see those two charts, or do you want me to expand them? Expand. Okay, hold on a sec because expanding them needs some yeah, we need some work. Hold on. Well, actually, not really. Hold on. Okay, hold on a sec. I'll bring it up. Mhm. Okay, let me show you this one. This quick one. Okay, how's that, guys? I'll go in a second. Sorry. Hmm. Let's make it. Okay. Can you see this now? Is it better? Oh no, sorry. Hold on. Okay. Can you see this? Is it better? Okay, perfect. So this is the Aussie. That's the AUD USD. That's the Australian dollar against the uh, that's also against the dollar. So why sometimes I always ask like people to like take a breath, wait for the trade to come to you. What I mean by here. So today it was actually two things that actually happened. I was able to do actually. Hold on, I'm gonna try to make something pretty quick as we can look at the chart interactively. So this one is not gonna work this way. Just hold on a second, please. We still have time. We can actually do it more time. Don't worry about it. Yeah, I'm gonna show you the MT4. I'm gonna try to show the MT4 in here. Um, yeah, I apologize. Hold on. Okay. Okay. Perfect. Fine. I got it. I'm going to show you the MT4 chart where we can look at multiple time frames for such indicator. And as I said, the indicator you can find it anywhere online, but at the same time you will find it on Orbex website once the recording and the presentation is up. And I'll make sure that this happens tomorrow. Okay, so let me show you here. Let me just add a quick snapshot. Yes. Hold on. Yeah. Okay. Can you guys see this? Hold on. Okay. No, hold on one second. Sorry. I'm about to get there. Mm-hmm. Output. Okay, let me move the screen now. You can see it. Yeah. Okay, can you see this one? Sorry for late. Okay, there you go. We're pretty here. Okay, I guess it's clear for everybody. Is it clear? Okay, fine, perfect, fine. So just a quick here because that's the beginning of March. That's March 19 at the end of the Friday, and here basically it was the opening of today's trading. But the good thing, first of all, as I said, you have the pivot first. The pivot is, or the closing price was above the previous day, and this is a 15 minutes chart. And here it worked on many, or two of the things that we said. First of all, connection lost. Okay, forget about the market. Sorry. So the first one is basically the breakout, which basically worked perfectly. And as I said before, and as you can see it here, so the first resistance area was 77.15. Okay, it was 77.15. So the breakout here basically happened all the way from here, from 77.15 all the way, first of all the way to 77.18, which is nothing, 3 pips, okay? And then went back down to 77.10, which is still low. And then it continued all the way to the second resistance. Okay, so the breakout here actually worked. Even if you put your stop at the pivot, you're still safe. Okay, and it continued all the way to resistance number 2. And once it hit resistance number 2, and then you had a reversal here, it went all the way back down. This doesn't matter to me still. I was waiting today because it's Monday. I hate trading on Monday, but I was waiting to see any resistance at 3, or the third resistance. If you look at the chart here, it was a pretty very nice trade actually to touch the resistance area at 177.47, and it went all the way to 177.47.6. I mean, that's even like less than 1 pip. And since then, it has been declining all day back down to 177.14. So how many pips we're talking about here? 177.47 to 14. We're talking about almost like 30 pips. Okay. We're talking about, that's why I said here is that I would love to wait for the trade to come to me before rushing into the trade. Despite the fact that, again, the breakout here worked, the breakout here also worked at the same day. It was aggressive if you're using the aggressive approach, and it continued all the way up, and then it smashed down. But still, right now we're trading within the same range since then. I hate Mondays. Okay, so that's number 1. Number 2, even actually. Kiwi, the New Zealand dollar made the same thing. The same thing. As you can see on the chart here, the same thing happened in New Zealand dollar. So it was just at the beginning of the session, up, down, and then all the way to a breakout, and then down here we traded around this level, which basically gives you some sort of a very clear sign that this level is a level of action. Okay, 2, 3 dodgy signs, and then the breakout happened all the way to resistance area here. It made 7 pips above it, and then continues back down, and then the spike. But here, this is what happened at the same time. The resistance level, or R3, is 70.72. But since then, from 70.72, and it went to 70.72.9. That's even less than a 1 pip. And since then, from 72, where is it? 70.72. all the way, we went back lower to 0.7028. That's more than 50 pips. Sometimes I would wait 2-3 days, but I would go with huge risk, with huge position whenever it goes all the way from whenever it tests resistance 3 or even support 3. Even in I guess it was GBP/USD today. Yeah, GBP/USD. A breakout at resistance number 1, it went well. Number 2, not really. But the most important thing that I need you here to know is that it goes back down to its pivot, and then it keeps on going back up and down, up and down, up and down. This is a very important level to watch today, and where the British pound is going to close. The same thing for the euro. The euro, it continued all the way up. We broke above the pivot point, above the R1. It didn't work out, but at the end of the day, we were just hovering around the pivot point. Okay, I hope this is clear, and we have actually maybe 5-7 minutes for your questions. I'm going to pick up some of these. Now, you're going to talk about 2 days relationship of the pivot range. I mean, with the width of pivot range, such as it narrows than yesterday. Abdullah, that will be the next week one, not this week. Not this week. Okay, good afternoon. I get message you are mute. you're muted by organizer. I would appreciate very much if you could unmute me. Oh, Damir, actually, I can't I can't unmute you because this is the system. So if you can write your question, this is how I can answer your question. But you can't use the mic because if we both use the mic, it's going to be a disaster. Okay. So if you have any question, please write it to me. Do we have to look the trend also on a higher time frame? Why not? It's always good to look at the trend at the general outlook. If you can, sometimes I like the 20, 21 simple moving average to look at the slope, not the levels, to look at the slope. Okay, is that clear? Okay, more questions? Go ahead. Okay, fine. I guess we're gonna just wrap it up in here. So the recording and the presentation plus the indicator will be available on Orbex website very soon. We have two days maximum. We have another question. After the closing of the New York session, how much time to look before the trade? Oh no, I would prefer to wait for the next day, which is the European session and the US session, but not during the Asian session. Asian session is kind of like not really good. Okay, Mr. Felix, I look forward to receiving the indicator, please. Yes, I'm gonna send it to the guys at Orbex. I'm not sure if I can send it here, but I'm not sure. Yes, there's nothing, but I'm gonna send it at Orbex, and they'll send it to you. Presentation, recording, and also the indicator. Okay. Okay, I guess we have to wrap it up in here. Thank you guys for coming again, and if you have any questions, you can always contact me on uh, that's my Twitter account where I'm always available. I just send it to on the chat room. So if you need anything, you can just share your charts, share your questions on Twitter, and I'll get back to you very soon. Thank you for coming, and we'll see you once again next week.